2025 has brought historic volatility to the markets, and at our firm, one strategy is standing out, delivering exceptional risk reward in this fast-moving tape. In this video, we'll walk you through that exact strategy and break down 3 real trades you can make with it. Hi, I'm Mike Bellafiore, co-founder of SME Capital, a leading proprietary trading firm based in New York City and Miami. We've built a culture that produces 7 and even 8-figure per year traders from the ground up, and we're here to help you get better every single day. You found the right place to learn how top traders are crushing this volatile market. Let's dive in.
Have you ever spotted the perfect scalp forming, but you hesitated and then just watched it explode without you? So I've seen that moment 1,000 times on our desk, but here's the good news. It doesn't have to be that way. And today I'm breaking down 3 scalp trades that actually work in this crazy market of 2025. These are setups our best traders at SME Capital use every single day to build real consistency. And yes, they are totally repeatable. When new traders come to us, when they start working with us, they're often caught kind of chasing garbage breakouts, overtrading meme names, sticking with names too freaking long, or buying highs with no tape confirmation at all. We had this trader, Tyler, who came from crypto, right? Crypto is this really interesting space, but he had developed some interesting habits. Super smart, tons of hustle, but he was taking like 10 trades a day and he was losing on like 7 of them. Here's how his day would kind of go. He'd start by making a good trade on the day. He'd be up on the day. But then over time, he would watch as his decision-making started to deteriorate through the day and his P&L would start to dwindle. It would almost trigger this negative cycle where he'd be thinking, man, I was just up like $1,200 in a good trade. Now I'm up like $300 in the day. And then he'd let FOMO start to creep in more and more. And then seemingly all of a sudden, he'd be down like $300 in a day and he'd end the day completely frustrated. On his bad days, he would start with one trade not working, then another trade not working. Then he would know he would need to take a break, and he would. But he'd come back and make a great trade and get up to like positive $500 on the day. And he'd feel such a sense of accomplishment and relief that he would almost mentally check out on the day, just trying to protect the profits he had. He was on a roller coaster, and that roller coaster was not leading anywhere. He was working really hard, but just spinning his wheels. Let's talk about the moment things turned around for him. It's when he cut his playbook down to just 3 high probability strategies. His win rate improved, his P&L smoothed out, and his confidence finally returned. The strategies we're about to talk about, they're the exact patterns that helped Tyler go from negative to consistent green days in this crazy market that we're in. These are the strategies that we see working the best in 2025, helping Tyler and helping you build a playbook that gets you into consistency so you can move on to the next level of challenges you'll face in trading. This first one is a classic. Stock opens up strong, pulls back under VWAP, consolidates, then tries to break higher and is rejected. This sets up a great continuation trade to the downside. One of our traders, Dylan, caught this in KIDZ earlier this week. The scalp radar fired for him for a fashionably late, but he recognized the trap that was being set here. He watched the offers reject. He recognized the attempt to reclaim VWAP was not really anything he wanted to see. And even more, he recognized the setup was actually playing out differently in a way that stacked edges against him for that trade. He recognized the setup was a day 2 continuation after an intraday reversal. This is what we mean when we talk about strategies, and it's one of the most important ways to stack your edges in trading, especially in a tape like what we're in right now. Strategy is really simple. It's a combination of the setup and the trade. Each combination of setup, in this case, the setup being the day 2 after the intraday reversal, and then the trade, which happens to be that VWAP continuation trade. That combination becomes a strategy. That is a very specific strategy. But let's take a couple minutes to discuss this setup in detail so we can learn and get it right for the next time we see it. Looking at it, this stock had made a very strong run, but late in the day on Friday, it had this big intraday reversal. It's a pattern we're going to come back to a little bit later. The stock was extended from VWAP intraday, but then in this swift and consistent selling, it sold off to below VWAP and closed the session in the lower part of the range. What we just talked about is key in correctly identifying that setup. When you come in the next day, you have the day 2 after an intraday reversal. Notice that's a very specific setup. On day 1, we had the acceleration higher intraday, distinct selling pattern, and then a close near the lows. What this setup provides us is an opportunity to recognize the possible shift in the psychology of the participants involved in this trade. The sentiment shift that occurred is from risk on in the trade to risk off in the trade. Now imagine you're long this on a higher time frame, like a swing trade. But then you see this intraday reversal. Are you going to want to stay long it? Probably not. Are you going to leave your stop at your entry, or are you going to try and raise your stop to try and protect your profits? Well, you're likely to raise your stop at a minimum to the prior daily low. And if you're more actively trading the stock, you might even just watch the trade, and if it doesn't reclaim an important price early in the session, you're going to GTFO, which is an acronym for get the final out. Well, not final, but you get it, right? So notice how this setup that we're talking about set the tone for the session on day 2. When we tried to rally a bit early, and in particular when we try to set up a fashionably late style trade long where we dip below VWAP and then try and quickly reclaim back above, and we can't. That trade never triggers where we get below VWAP and come back above. What's the high probability trade here now? Knowing what we know now, is this a long or is it a short? It's a short, right? And what trade are we actually being offered? This is a VWAP continuation scalp. It's almost like the attempt at the fashionably late, which could be a really valid trade in a lot of situations. And the failure of that is the trigger for that VWAP continuation trade lower. We don't have to be aggressive here. All the checks are with us to the downside. We can allow the trade to confirm for us, and then we can take the scalp with very defined risk, and we can trail out of the trade using a close above the 9 EMA as our reason to take our profits. That's what our trader did. He recognized the setup. He saw that first attempt at the fashionably late fail, and then that trade just fell into his lap. He let the volume come in, he entered with precision, and he relaxed and let the trade develop for him. Here's one of the setups that we're seeing, one of the strategies that we're seeing work exceptionally well in this market. Stocks driving aggressively off the open lower, but really they're just driving into a key support area on a higher time frame. This setup is a drive into a higher time frame support, or extension into key support. That's what we categorize this setup as. And remember, the strategy is the combination of the setup plus the actual trade we're given. When you have that drive into key support, it can get a little bit tricky. It can feel like, oh, maybe it's not quite there, and then boom, it reverses and it starts to trend back higher, giving you a really clean trade. Now, these are trades that we love using the scalp radar for. These are trades that we love scalping. There's a ton of initial energy driving this stock down into support right from the open. And there are traders who are tripping over themselves to try and catch the lows. As you see from the chart, as it starts to reverse, those traders instantly go up in the trade and it starts to feel good. It starts to come off support. But then it feels like they're going to lose really quickly as this intraday almost continuation reversal looks like it's happening. But what actually happens, and what happens so often in this strategy, is it sets up a really good trade for us. The stock moved quickly into a key support level on a higher time frame. Once it lifts and then pulls in and we get that higher low being put in, we have a great backside that shows up for us. Notice, by waiting for the backside versus trying to catch the lows, we can sidestep all the noise and get an easy trade once it shows up for us. The backside turns into a fashionably late, and we've sidestepped all the noise off of that extension into key support allowed that significant higher low to get put in, and then traded against that higher low, looking for the backside, and then oftentimes the fashionably late, which is exactly what one of our younger traders, E, did on this trade. He allowed that higher low to get put in when everybody else was like a little bit nervous because of that quick pullback. He bought that higher low and then that little break of the consolidation just above that higher low. He exited into VWAP and then rebought for a fashionably late, looking for continuation to the upside because he recognized the buy program. Look how much time it took for that selling pressure to alleviate before the buyers could step in. This is a pattern we are seeing over and over and over again in this market. Aggressive move down into a key support area right from the open. So we have an extension into a key support area. And then instead of looking for like a rubber band or a snapback trade or something like that, you're actually letting that higher low get put in. And then you're seeing the backside. And then if the backside plays out the right way, you're taking the fashionably late trade. This combination of setup and trade is a strategy we are seeing play out a ton in 2025. This last one's for the short sellers. Here's what really is happening. It's after 130. The stock's been grinding up slowly on like okay volume, typically a little bit weak volume. Suddenly we see an increase in volume as the buyers disappear. And then the bids start to get hit hard. This is a trap. The late longs wind up getting smoked. So one of our fastest developing traders caught this exact short in Tesla last week. He used the scalp radar to find that midday runner, but he didn't get married to the idea that this was going to extend further. He watched the tape try and put that little breakout in and then waited for the volume and was surprised almost that the volume started coming into the downside. Once it got down, he let that first move happen. What he recognized was that setup changed entirely. So it went from a breakout or a potential breakout to a failed breakout. And then he allowed that afternoon rollover to happen because the setup had changed. So the strategy that he was looking at before this trade occurred, and this is happening all the time this year, the strategy he was looking at was potentially, okay, I could see continuation to the upside. But when the volume started to come into the downside and the setup changed from a break out of range to a failed breakout, he not only recognized that there were buyers that were late, that were trapped, but even more importantly, he was able to pick off how aggressive the selling was on the tape. It wasn't letting the buyers lift at all. And it was creating this really good trading opportunity for him. So what he looked for was that failed breakout to occur and then shorted the first touch of the 9 EMA after that failed breakout occurred. This is a 9 EMA continuation trade, but not one you see on the open. It's one you actually see in the afternoon. And it's a great scalp when the momentum has shifted or the lack of momentum to the upside led to momentum to the downside present with the volume and the aggressiveness of the sellers. You can see this very clearly how we tried to break out and then the sellers kind of stepped in with increased volume. And then we see a light volume rally right into that 9 EMA with that clear and distinct turn. That's where your stop goes and you look for continuation to the downside. It's a very easy trade, but what's really happening here is the traders that predicted that this was going to turn into an epic breakout, we're not seeing that as much in 2025. What we are seeing is a lot of attempts at an epic breakout and then failures. And then once that fails, the momentum starts to come off in the afternoon, and it's almost like all the momentum goes back to the downside. So we can use that 9 EMA continuation trade looking for a really nice scalp to the downside. These trade strategies work because they're structured. They're backed by real order flow, and then we allow the tape to confirm them. They repeat and they scale. The setup and the trade combination, that strategy, stacks the edges in our favor, and then the trades just kind of fall into our lap. Most new traders kind of miss them because they get distracted watching 8 tickers and taking every single breakout. But our desk teaches focus. 1 or 2 setups, and then we find the high probability trades that go with those setups to create a strategy that gives us full confidence. This is where the community and the tools we use like the S&B Scalp Radar make a big difference. These filter out so much noise and they highlight where the real edge exists in our trading. Now, if you want to start making real progress this year, here's what I'd do. I'd pick one of the 3 setups we talked about. I'd track it every day for 2 weeks. Find every example you can for 2 weeks of that. And then journal every trade you see that's presented in those 3 setups. What worked, what didn't work. And then you're building a strategy with a playbook for those strategies, those specific combinations of setups and trades. We've given you ones that we're seeing work very well this year. And that's what we do at an SMB's desk. That's how we get our real traders consistent and help them grow. We don't just trade, we study the right trades, we build the right process, and then we let the market come to us. If you need some more information or you want to find out more trades, just check out this recent video we did that breaks down of a couple additional trades. And if you want help finding these setups in real time, just like our pros do, check out the S&B Scalp Radar. It's a tool we built to scan for high probability scalp trades with real volume, real tape, and real edge. And even if you want to check out the free cheat sheets, go for it. It's yours. No fluff, just edge.